This review will be based on last week's trading. So first of all, I will be talking about most of the trade I took as of last week. Now we'll be focusing our attention on this is last week, this is last 2 weeks. So my objective for last week was to trade inside. We had an inside week. Okay, so we had an inside week. And last week this was a low. Okay, and then this was our high. Right. This 2432.24 the high of last week's, and 2303.94 the low of last week's. So with that being noted, we want to understand that the market sees this kind of gaps, this kind of weeks, this whole week as a gap which it would like to fill in. So dropping down to a daily time frame. Now we had an inside week, but that doesn't mean we didn't have some buying and selling. We had some buying and selling inside the week. Although we didn't really trade much, but we'll be starting our analysis from Monday, Tuesday. This is Monday, Tuesday, Wednesday, Thursday, Friday, right? So with this level, last week's price level, now the basic first thing you want to do, like when you're analyzing, is you want to understand the narration for the week. Where is the market likely going to head for the week? Are we going to have an expansion for the week, upwards expansion, or are we going to be having a downward expansion? Or are we going to be having an inside week? An inside week in the market is a situation whereby the market doesn't trade above the previous week or below the previous week. It stays within that price range. Good. So we have this price level, this whole box, this shaded blue box. We have the middle point as a consequent encroachment, like 50% of last 2 weeks price or dealing range. Okay, so anything above 50% is premium, anything below it is discount. So now I'm going to be opening my 1 hour chart and point to all the trades that I took, the reason I took them, and I'll be explaining them one after the other. Okay, so from the trades I took last week, I took a buy from here. I targeted just this inefficiency resting above here. This was my target. I took a buy from here. I took a long position, and then I took a short position. I took a lot of trades as of last week. I took a lot of trades, but these are some of the few ones I can clearly remember, although they are in the Telegram. I took a sell on this, and I took a buy from here. Sorry. I took a buy from here. Took a buy. I took this buy. Alright, so these are some of the few trades that I can clearly remember which I took. So let's get right on to why I took this trade and we'll understand them clearly. So first of all, we need to find the Monday open. We need to find the Monday. That is last week Monday open. Okay, so let's get rid of all this long and short position box and dive right into the market review for last week. It's been a while I did review, but most of you might not understand the concepts, but I'll try my best possible to simplify. So this is our last week's low and this is our last week's high. Good. So for the week, for the week, and this being our daily time frame. So this is Monday. So Monday, one thing you should know is you want to be buying. If you've been bullish, you want to be buying below the opening price or below the opening low. Okay, so with this being Friday, last week's Friday, sought to buy below this. Okay, so buying below this will give us a really discount array. So when price opened here, traded high, traded lower, closed, opened here, traded higher. So this Monday, our Monday low went down below Friday, stopping out anybody who would have gone long on Friday. So we have this as our Monday low. So we have the low for the week. Sometimes Tuesday might create the low for the week, or Monday, either of those 2 days. Tuesday or Monday might create the low of the week. So Monday, we had a run. We had a run below Friday and Thursday, but we didn't go below Wednesday, and we didn't close below Tuesday. All right. And also on the daily time frame, this is the XAUUSD daily time frame on the market review. We also have this fair value gap. Let me get this in a higher color. So for the week, I was expecting price to drop and not close below the fair value gap. This fair value gap, it's permitted to drop lower, that it happens, but not close below this fair value gap, because this price level respected the fair value gap. The bodies, the wicks do the damage, but the bodies tell the story. The body stays in the fair value gap. The body stays in the fair value gap. The wick came to the consequent encroachment mean threshold of the fair value gap. There is middle section. Let's get this in white color, and let's get this in red. Yeah, so we have this consequent encroachment, the mean threshold of the fair value gap, and then we had a one more dip on Monday, but when Monday closed above, so it was a sign that, all right, good, where are we likely going to head for? And as I said earlier, whenever we have a strong week like this, price sees it as a gap. Price sees it as a gap, and we want to rebalance it. So my focus for last week was the consequent encroachment and above. All right, so a mean threshold and above. So I would be buying. So I'm going to put it as CE, consequent encroachment, 50% of this week. Okay, so that was my target. My target was 50% of this week or above it. Good. So when Tuesday opened, we had a run up, we had a run down. So now we're going to jump down to a lower time frame. And also, if you look on the daily time frame, we had this Tuesday, Wednesday, Thursday, creating some sort of trend line downwards. These are all low run liquidity, which have stops resting above them. So let's jump down to a 1 hour chart to get down to the business of the day. Okay, so we have this low for Monday, we had the fair value gap, and also if you zoom out on a higher scale, this price level is a consequent encroachment of the dealing range. Now, what is the dealing range? The dealing range, I do not want to get like real fine into it, so I'm just going to stick with what's pretty small basics. So this was the fair value gap. We had price trading inside of it, came back on Monday. Good. So on Friday, we had this accumulation, because power of 3 has to be delivered. We have accumulation, we have this relative equal lows, we have accumulation, we had manipulation, we had distribution, right? So when we had distribution, what do we see? Note our target was this price level. Let's get our targets. Our target was this level and above. So I called on the Telegram channel that we should be looking forward to price coming above this level. We should be looking forward to price coming above this price level, 239785. I called it on the Telegram channel, and the reason is because when you look clearly at this thing, at this price level, you have this high, we have this high, equal high. I always say whenever price sees equal highs, too smooth, too good, that is going to make sure that think of it as resistance, that is liquidity. So in this form, it is called buy side liquidity. For traders who would want to see price break above this place and put their stop, their entry like this, you clearly see how well they would have been stopped at, who would like to ride the market long. So we have this high, we have this high. Now this was Tuesday's high, we had Wednesday's high. Good. So when Monday had an expansion upwards, I took a buy from here. So we had this move. All this move was just to get above 2402.39. So we had this move, expansion, after accumulation, first price delivery, because everything starts with the accumulation phase. You can also call it ranging or consolidation, but it starts with accumulation. So we have accumulation, we have manipulation, turtle soup. It's also called turtle soup or Judas swing, ICT concepts. So we have accumulation, we have manipulation, we have distribution. All right. So now when we're distributing into, in this case, your eyes should be gravitating towards where is it going to. Like, that's why I said that whenever the week starts, you want to be looking for the narrative for the week. Where are we heading for the week? Where are we heading for in the day? Where are we heading for in the next 4 hours? So when you have the broader picture of, okay, we're heading for this price level in the week, you would be trading in that direction. And you know that whatever price they choose to fall down, you're confident that, okay, this falling down is a trap to move back up. Okay, because institutional traders, they don't want you to make money, so they're going to make it difficult for you to see. So when we had accumulation, we have this swing sell, this impulsive sell. Also, this is also called a sell side inefficiency. Sell side inefficiency, buy side imbalance. All right, so this is called a CB. All right, so this is a CB, sell side inefficiency, buy side imbalance, in the term that price was only offered on the sell side. So this is also a draw on liquidity. So when you have this kind of narrative, you understand that, okay, we have a sell side inefficiency. Now it's imbalance like in the buy side. So we had this sell, there's something needs to balance it. So for price to be balanced, it has to come on the buy side. So when we have this sell inefficient, we have a move back up, an accumulation, manipulation, distribution, a market structure shift. Then what are you pointing out to? From this low to the utmost high, this high. So this is Tuesday's high. Now your dealing range, now you want to be looking for your dealing range. What I did was from the low to this Tuesday's high, this is the high, to this Tuesday high, you drag your Fibonacci, you plot that, and get up. Yeah, good. So what you want to be doing is buying at 50% or below discounts. All right. So when for a normal market structure shift type of trader, when market structure shift happens, you wait for it to come back into discount and then you buy. Now, why is the buy not valid at this point? Let me explain. Now, from the low on Monday to the high on Tuesday, where does 50% fall in? It falls in here, 2360.68. Now, what's resting there? We have a bullish order block, we have a fair value gap, and we have a discount array. So with everything being said, with every confluences being met, you understand that you can actually take your buy from here. Now, where do you think traders would be stopped at? Now, like I always say, whenever you see something equal, let me get rid of some of the lines so you don't get confused. So when you see these things like equal lows, equal highs, you always want to know that price is always going to gravitate like some jetpack towards that area. So we have this relative equal lows, relative equal lows, sell side liquidity. All right, liquidity. So we had sell side liquidity. Now we're taking sell side liquidity, but where is price heading for? We understand that we've had a market structure shift on this high, also this high, and then what do you think price is doing? Now you want to understand that when price moves to a premium. A premium is on the sell side, right? Discount is on the buy side. Now, because we have an objective or a narrative to head above 02.39, because we have the objective to go above or at that price level, we know that whatever from this high to this low, you mark out the consequent encroachment of that swing of that price level. Okay, so when you mark at that old price level, you get a new dealing range. Good, but this clearly tells us that this is the middle portion of the market, the middle portion. But why is price disrespecting it, coming down below? It is because we have a market structure shift. We have this high, we have this relative equal highs, and then when we use our Fibonacci from this high, from the low to this high, we have 50%. So from this low to this high becomes our new dealing range. So anything below these equal lows, which are sell side liquidity, should be considered buying opportunities. And we have a bullish order block, we have breaker, we have every confluences we need, we have a CB which needs to be rebalanced, and we have everything we need. So when we have expansion, accumulation, manipulation, reaccumulation, distribution, this is also the sum of accumulation, manipulation, distribution. Now, when price would likely move to areas like price would likely move to a premium to build liquidity and drop down to discount and then go back up to take up that liquidity it has built. Price will move to discount to build liquidity, to manipulate to premium and come back and take that liquidity. In this scenario, let me show you now in this scenario. Okay, so in this scenario we have this. So when you measure from this low to this high, now this is not at discount, this is not at discount, so it makes it invalid. Now every price cheaper, like to buy cheaper, would be below this level. Now for retail traders, they'll see this as support. When price came down, it went up. Now watch this, we had price come down, go up, come down, creating liquidity. Now when you're trading, you want to be looking for anything equal, anything, even though it's something like this, it's equal. If it's something like this, it's equal. If it's something like this, equal stuff are targets. So when we had this price move up, come down, go back up again, creating what? Equal highs. Now you see this strong rejection. These are retail traders who would want to buy here. So when price came here, move back up, stop them out. Good. After stopping them out, what do you think? Liquidity has been taken and then move back up. We have this high. We have this high. What do we have? A market structure shift. Boom. So after a market structure shift, drop down into discount. Good. So after dropping down into discount, a bullish order block, we have up, another buy, come down again into a consequent encroachment of this gap. And get all right. Consequent encroachment and below. Okay. So consequent encroachment 50%, the middle portion of the gap of this week. Consequent encroachment. Likewise, the same thing we're targeting on the sell side. Come down here, boom, run up, taking out this relative equal highs, which I actually mentioned on the Telegram. Take out them. After taking them out, for those who think that okay, price is moving for upward movement, we have a break, we should be retesting. This rejection right here becomes their retest. What happens? Comes down, sweeps them back in, retraces back to the same consequent encroachment for discount buy against. And then for those who had their stop loss resting here as break, come to the February gap, good, moves them back up, takes them out again. Now you want to understand that you want to be targeting highs, low, high, low, high, low. That's how you want to be doing. Now I can easily trade this back and front with the intent that if I understand that liquidity has been stopped out here, we have break and retrace traders who would want to go long, and price has already met an objective. Where do you think it would want to go for? It will want to go back into discount. And from this low to this high, where do you think is discount? We have 50%, we have 62%. That is discount for me. Right? So if I'm not buying at 50%, I'm going to be buying at 62%. Okay. So when price comes down, my target is this low. So I took the sell. I think I took the sell. Yes. So I will be targeting this low, this swing low right here, because there are some traders who would have their net positions there. And when price drops down impulsively, goes back up into fair value gap, good entry, sweet entry. Yes, this was a Friday street. Yeah, I took this sell. Yeah, I took the sell. So moves back up. I'm not targeting this low. I'm not targeting this low. I'm not targeting this. I'm targeting this that caused the impulsive move. So when price comes down, retraces back up into discount array, premium array, I'm going short with the intent of going below this. So when I get this done, boom, I'm out. And then I'm buying it again. Why? Because I know very well that we are going bullish. We're having a CB and we should be having a BC. Okay, so I'm buying here again and I'm targeting where this same price level again. And that is what I did on Friday. I closed up my position. I took the sell, I took the buy. Good. So the basic things I actually focused on was one, the narrative for the week, because if you don't understand the narrative for the week, you're going to be in a lot of trouble. You should understand the narrative for the week, understand the narrative for the day, or understand the next 4-hour narrative. If you don't understand these things, if you don't know where the market is going to, where it came from, where it's coming from, you're just going to keep trading in cycles. Okay, so let me clear out this chart. Good. So now going back on the daily time frame, we're going to look at what might happen for next week. So we want to go back to next week to see what should be happening for next week. So this is our weekly chart. Now for next week, we actually don't know where the market is heading for, but from my own analysis, I think that we're heading above this high. This high is the target, and we might run above that high, we might not run above that high. But if I use my negative 80% retracement stuff and I go over to the 1 month time frame and I pull out my Fibonacci and I draw on my Fibonacci, you clearly notice that I have the positive side and the negative side. Like I have 50% positive, 62%, 72%, 80%, 100%. And on my negative side, I have 50%, 62%, 80%, 100%. Now, I am still expecting price on this high on the monthly time frame. Now, this is the monthly time frame. I'm still expecting XAUUSD to still run up higher, 62% or negative 80%. I'm still expecting XAUUSD to run up higher. So I'm still going bullish on XAUUSD. So with that notion, with me having that understanding that 2479.34 is a target for me next, I know that there might be some dropping down. Okay, so let's see. Okay, so if this is the target for me above this high, what do I want to do? I want to be looking for something below it. So I have this low, we have this high, higher, this low, higher, this one. So we have this swing low. So with this being my swing low, because we're having this low dropping down into this fair value gap right here. So I want to be measuring from this to this and expecting what price might drop down into. So we have this fair value gap. So for next week, I might want to see price drop down into this fair value gap. So this might be a target before we take this high out, before price takes out this high, or after it takes out this high. So that's the thing. You don't know until the market starts playing out. So on the daily time frame, if Monday comes, we should be looking at this price level. This price level, if we take out this high, it's good. We don't really know for a fact, because the reason why I understand that we might be going lower is because we've actually closed above the consequent encroachment. And for me, studying this, whenever price closes above the consequent encroachment, that is a shift in market structure. And if market structure shift happens, where do you think it's likely going to head for? It's likely going to retrace back into discount. Okay, so this is a discount for me anything here, I'm going to be looking for buy. So from next week, I might be looking for sell opportunities. So this is accumulation for me again. So this is accumulation, and I would not give it 100% until I start seeing some signs that we are likely heading towards or below this. And also, like I said earlier, we have this relative equal lows resting here. So I would like to see price come below that. We also have this equal lows resting here. I would like to see price come below that. So this is how I place my targets. I see that okay, price has actually breached this consequent encroachment level, and I would like to see it retrace backwards. So on the 4-hour charts, we actually know that, or on the daily chart, we actually know that price has actually rebalanced the sell side, the CB. There is this sell side. Price has actually rebalanced the CB. Also on the 1-hour, to some extent, we might see some little upward move. Price has actually rebalanced the CB, and we should now be heading for this relative equal lows on the sell side liquidity. Good. On the sell side liquidity, that's where I would like to see price head for. Take out this level. We have this bullish order block here, which would be a target. So dropping down to a 1-hour chart. Now on the 1-hour charts, there's some funny magic or some funny business happening, which I would like to explain. Okay, now we're looking for the negative 80% from this high prior to the low. Okay, so now we are at the 80% level. What does this tell me? It means that we've had a breach in market structure. So I'm not sure that price would likely come above this high anymore. But here's the funny business that should happen. This high is protected for me. So I'm not even sure the price should be coming anymore. But when you go down to the 1-hour chart, okay, go down to the 1-hour chart, we have this fair value gap resting here. Right? Yes, we have the fair value gap resting here. But what has price built on this fair value gap? It's clearly visible. What has price built on the fair value gap? Because traders would have gone long here. Price has built equal lows resting here, liquidity resting here to stop out traders. So now, where do I want to be buying? Where would I love to buy? Now the thing is, I am looking at this whole price level, this whole week, 50% or 62%. So my buy, I would not want to buy here. I would want price to drop lower, and I want to buy here. 238293. That's where I would love to buy. If you go down to a 30-minute time frame, we have this bullish order block resting here. We have an inversion fair value gap from this high to this low. We have an inversion fair value gap. So I would like to see price drop down, respect this fair value gap. Okay, I would like to see price respect this fair value gap, and then do this drop down and then go back up, taking out this high, and then go back down. Good. So that's what I would expect price to do, because we have this fair value gap which price has left for smart money traders to want to like buy, sell there. Okay, so this is what I'm expecting on the XAUUSD mojo. I like to see price head up, come back down, move back up, and then we start our bearish move. That's the expectation that I'm expecting, and my stop loss will be above this high and stuff. But I would not trade until I see some signs that yes, this thing is going to respect what I hope it will do. And as you can see on the daily time frame, we have this consequent encroachment. Let's drop this down. Good. We have this consequent encroachment. So above it, this white line, that is where I want to be selling. But I know that price might likely drop down, and also you can see that this is so beautiful. Even on lower time frame, the higher time frame analysis still corresponds. This last down candle is a bullish order block, so I would want price to drop down into this bullish order block level. probably the breaker. So might be considering this. This is what I would be anticipating. Price opens here. Let me put this in green. Okay, reduce this one. Okay, so this is what I'll be expecting. I would want price to do this for me. Drop down. Drop down into somewhere this, and then open somewhere here. Drop down like this. Let me zoom in closely. Okay, this is just a possible scenario. It doesn't mean that price is going to deliver or do this exactly the way I want. It's just a possible case scenario that it's likely to happen. It's likely going to happen. So if it doesn't happen, then there's every possibility that I might be wrong or I might be right. So I would like price to open, trade back up, trade up a little bit, and then start coming down into this and moving higher. So for the day, maybe Monday, I would want to see something like this, or Tuesday, something like this, or with some rejection back down. Then for Tuesday to give me the high of it all, so something like this on Tuesday. Then for Tuesday to still move up higher and then start going down. So this is just basically everything that I would love to see. But as for next week, I would be targeting this equal lows, and also I would want to see price for next week or for the day do something like this. Start creating lower highs, lower highs, lower highs. This is what I want to see with the intent of coming below this, and then we start moving back up to take out these levels.